Well, we were there for like a minute, by the way. So we'll see. We'll see what happens. There's a host of different reasons that we could retest that. I don't think it really matters longer term. I think it may be healthy to make a double bottom there. But I do think what's interesting, if you look for the month of January, and this is how narrow the market is, every single sector was negative for the month of January, except energy, which was up 19%. So I think to Josh's point, you have degrees of negative, with the exception of the very narrow energy market. And, there's a saying in our business, that concentration creates wealth and diversification preserves it. And that's why, in our portfolios, we've had a really outsized exposure to covered call strategies. We use JEPI, but just like having covered calls to lean into that volatility, I think is really important. And I think we're going to continue to have this churn in the market where, with energy, it's a buy the dip. With tech, right now, it's a still sell the rip, because I think everyone's still so focused on, what is the terminal rate of the Fed for interest rates? How high is inflation going to be? And so the market's very uncertain around that. But I feel really confident that 4 months from now, 5 months from now, GDP is going to be coming down very quickly. GDP is decelerating. I don't know what rate hikes, how they cure supply chains. And so I think it'll be good to get a few rate hikes, or maybe 1 or 2 under our belt, and the market will somewhat settle down. But I think ultimately later on this year, tech will start to potentially get a bid as we see GDP coming down. We've handled a couple rate hikes, because ultimately the Fed really can't tighten much more than 5 or 6 times. They just can't, because we have too much debt in our balance sheet, and the average maturity of our debt's around 5 years. And if you refinance that at 2-3%, that ends up being like 10 to 15% of our fiscal budget every year. And so the market's thinking the Fed's going to raise rates so many times. I don't think they will. And so that's where you want to be super diversified now, as the market is panicking about everything. And then later on the year, when you have clarity, I do think you're going to get more of a bid in technology stocks.